Let's jump right in. Today we're tracing some truly massive financial pathways. We're taking a hard, data-driven look at how public funds and private investments are crossing paths in some pretty unprecedented ways. We're going to literally follow the money, step by step, to understand exactly how a series of investments transformed into a multi-billion-dollar financial engine.
First off, let's talk scale, because these numbers are wild. According to recent reports, in just the 2 years following the 2024 election, Donald Trump Jr.'s estimated net worth shot up from $50 million to a whopping $300 million. And his brother Eric Trump? He saw a similar leap. His estimated net worth jumped from $40 million up to $400 million in that exact same window. I mean, we're talking massive increases in wealth in a really short amount of time, and that perfectly sets the stakes for the data we're about to unpack. Okay, let's dive into this. How exactly did these numbers change so drastically? We're not just looking at random market luck or your typical stock market gains here, right? The source data points to a very specific, highly documented mechanism of wealth generation, and mechanically, it's absolutely fascinating to break down.
Section 1, the investment mechanism at 1789 Capital.
So to figure out this wealth increase, we got to look closely at 1789 Capital. This is a private investment fund Don Jr. joined as a partner just 5 days after the 2024 presidential election. From that point on, a clear three-step formula pops up. Step 1, 1789 Capital takes an investment position in a company. Step 2, that same company, shortly after, wins a major federal government contract. Step 3, the company's valuation, and by extension, the value of 1789 Capital's initial investment, just skyrockets. It basically creates this continuous circular loop of wealth generation for the investors involved.
Section 2, defense and tech federal contracts. And this brilliantly illustrates the formula in the real world, specifically in defense and tech. It's a dramatic before and after picture for these suppliers. Let's look at Hadrian Automation. Founded in 2020, 0 major government contracts. But 8 months after 1789 invested, they secured a $900 million Navy contract and an $80 million Army contract. That is $980 million total. Then you have Firehawk Aerospace. Their entire government contract history literally fit on a single line back in 2022. Post-investment, they land $8.9 million in Air Force and Space Force deals. Oh, and Anduril, a major autonomous weapons maker, scooped up over $390 million in contracts right after 1789 bought in. So yeah, the pattern is remarkably consistent. But you know, it's actually not just standard contracts. The data shows some other pretty unique federal benefits flowing to these connected companies. Take Reflection AI, for example. They were granted highly restricted access to deploy right inside Pentagon classified networks. Or over in Kazakhstan, a company called Kovskaz secured $1.6 billion in U.S. government-backed financing for a tungsten mining project. And their own SEC filings say this deal was aided by direct political assistance. Plus, crypto and Bitcoin companies co-founded by the brothers have attracted hundreds of millions in investments directly from foreign governments.
Section 3, Vulcan Elements and the $620 million loan.
Now, let's shift our focus to what might just be the most striking example in the entire report. I want to walk you through this highly compressed timeline. In August 2025, 1789 Capital invests in a company called Vulcan as part of a $65 million funding round. Just 3 months later, in November, the Pentagon awards Vulcan a massive $620 million loan. Following that huge injection of public funds, Vulcan's valuation leaps from $200 million to nearly $2 billion. Keep in mind, federal deals of this size usually take many months, sometimes years, to process. This whole thing happened in just a matter of weeks.
Now, this particular loan really stands out in the reporting for a few highly irregular reasons. First off, Vulcan Elements is a 3-year-old startup with only 30 employees. To put that into perspective, that is literally fewer people than work at your local Target store. Despite that, there were absolutely no competitive bids for the $620 million. Furthermore, the standard technical disclosures that are usually required to verify a project's viability, those were entirely waived. And significantly, the report notes that the push for this loan came directly from Peter Navarro, a senior trade advisor and close personal friend of Don Jr.
To fully grasp the internal pressure surrounding this deal, we just need to look at this quote. A Pentagon employee told ProPublica that the call came down stating, from the White House, "We have to get this done." The reporting indicates that staff worked late nights for weeks to bypass the normal protocols and push this massive, non-competitive loan across the finish line.
Section 4, the drone loop. Let's move to and see how this builds into an even more complex web involving two completely separate, yet interconnected drone companies.
If we track the flow of money objectively, here is exactly what we see.
In April 2026, a company called Power US, where both brothers are investors, wins an undisclosed Air Force contract for interceptor drones. Now, backing up slightly to October 2025, Unusual Machines, a company where Don Jr. is an advisor and holds a financial stake, wins its largest government contract ever. Then, the loop closes. Unusual Machines signs a $5 million supply deal directly with Power US. So, let's map that out. Government money flows into Power US, and then Power US turns around and pays Unusual Machines.
The mechanical outcome of this loop is highly effective. Eric gets paid through his stake in Power US. Don Jr. gets paid twice, once through Power US and once through Unusual Machines. You see, they aren't receiving these government contracts directly as individuals. Instead, these intertwined federal contracts continuously inflate the underlying value of the companies they own pieces of. It steadily multiplies their personal wealth right from the background.
And it's wild because this financial engine shows absolutely no signs of slowing down. 1789 Capital is currently managing $3.5 billion in assets, and they've publicly stated a target goal of reaching $10 billion. As long as this mechanism remains in place, the scale of this wealth generation is only going to expand.
Section 5. The legal reality. So, the crucial point is all of this permitted?
How does this entire system of taxpayer dollars flowing into these portfolios actually operate within the bounds of the law? Well, we have to look at the sharp contrast in the rules here. If a mid-level federal worker, let's say at a Navy base, simply owns stock in a company bidding for a contract that they oversee, they would immediately lose their job. They'd likely face criminal charges too. But as the source data outlines, for the president's children, the legal landscape is just entirely different. There are simply no laws that cover them in this scenario, and absolutely no requirements for them to recuse themselves from federal decisions that directly benefit their private investments.
Which brings us to our final thought. The data we've explored today cleanly maps out how hundreds of millions of public dollars are continuously elevating these private portfolios, all entirely within the current bounds of the law. So the question we have to leave you with today is this. Are we looking at standard business savvy taking advantage of the current system, or is this a massive legal loophole that requires a much closer ethical look? Thank you for exploring the data with me on this deep dive into the source material. Keep asking questions, keep looking at the data, and I'll see you next time.